Yo, what's good, YouTube? I hope everybody's having a wonderful day. I had some requests, on a couple of videos that I should make. And the most common one that I see that people wanted to actually learn about that I should do a video on is actually getting, entries. A lot of people, wonder where should you enter the market? When should you enter the market? Why should you enter the market? It is literally crazy. And it's something you could talk about forever. There's so many different ways and strategies to be able to enter the markets and get a good entry for a trade. And there is not particularly, I would say, a right or wrong. Is really just what you're looking for, right? Everybody has a different strategy to their trading plan, and what they're looking for is going to require a different type of entry. I'll give you guys about 3 examples of the type of entries that I take, and how sometimes they all line up together, which just makes for an even more powerful trading opportunity. So let's go ahead and share my screen. Currently, we're actually looking at crypto right now, just monitoring Ethereum, monitoring Bitcoin. And I want to go ahead and actually give some examples, just using these of like places where I would enter based on these trades. And I'll give you guys like an example of a chart that's not live currently. But let's actually look at Ethereum. So I'll list out 3 types of places where I'll look for entries, right? I'll list it out for you guys. So 3 places where I'll look for an entry is support and resistance. Okay. Institutional candles. And Fibonacci, right? Fibs. These give me some of the, top entries that I can actually use. And when I say support and resistance, I would say basically that's definitely a timing thing. It's definitely big on timing when it comes down to support and resistance. But for institutional candles and fibs, it's pretty much straightforward. You're entering at those particular levels. With the stop loss typically outside of what, would invalidate that candle or invalidate that price. So let's actually look at some examples here. I'll actually wipe this chart clean so we can go through some examples. So one really good example that actually just took place on Ethereum is that, Ethereum is spiked at, the all-time high, but it rejected short term. And what I noticed was that we have the market, make this pretty decent drop. They didn't break a large structure, but they did break, these little structures here and came down. They corrected, came sharp, right back down, right, feeling this imbalance here, but they really didn't break all the structure. So there's only truly there's only 2 options that typically come at these type of setups, right? There's typically only 2 options. One of the options is that this could be a completed correction and that this could move aggressively and continue to go past the highs. All right, that's one of the more, common options, right? A zigzag pattern, or what some people call a flag, and just continuation. Now there's one more pattern where the market will actually correct up this move, but not break the high to find a deeper low. Or at the worst case scenario, they'll correct up this move to pull down to push up. But at the end of the day, they're correcting up to make a move down. So one of the most simplest things that I use for entries is Fibonacci. So if you actually fib this from the high to the low, okay, right there, what you'll see is that the market came right up to the 61.8. Now, a lot of different people use their fibs differently. Some people will look at this and fib it from the open and close prices, right? Which would give you kind of like the 61.8 right on the open and close price here. But oftentimes I like to do mines from wick to wick. I just found a lot of success using it that way, but for the most part, I know what I'm looking for, especially on this type of setup. So basically we have this move that's coming to the 61.8, and the question is, do you enter it right at the 61.8, right? And for me, my answer is, typically no. There's typically one thing that I like to see with that Fibonacci rejection is a break back below a lower time frame structural point. All right, so they did close on this high, but they didn't really break above it on this 1 hour, but they did, close right on that price. So that area right here became very important to me. So if I go to the 30-minute, the 15-minute, I'm looking for, a structure that was built and then broken. So what I see is we have this high here. The market makes that higher high that reaches for the 618, and then we get this engulfing candle back below that resistance line that we had. Okay, and it's also back below this high as well. Okay, now this engulfing candle, it just engulfs one candle, but when you actually are getting the actual entry, it's a really great opportunity to take these type of trades. Now typically what I would look for on this is I would look for a retracement back into this candle. But sometimes, because that it may be a better candle on the lower time frame or only on the 15-minute, there could be opportunities to look at candles on the 5-minute as well as the 1 minute. But let's just go ahead and assume here we're going to play off of this wick. Okay, the wick, the low of this wick is also structured, right? They hit this low and then pushed up and closed up here. Them closing below that wick and then pushing back up, testing that wick and beginning to reject from it. For me, oftentimes I'll take entries off of these levels. So what that would get me was, okay, this, stop loss easily would just go above this candle right here. So it could be as short as, with crypto, you have a spread, that's typically larger. So we'll just put this here, but then let's really look like, what is our first target on a trade like this? For me, I would probably be looking to move stop loss to break even inside of this candle, which they did consolidate there. They could have used this to push up, but then easily my first target would have been below these two relative even lows here. Right, that's already a risk to reward of 1 to 4. Right, it's already a risk to reward of 1 to 4. And I like taking these type of opportunities, and oftentimes even if the trade isn't successful, I'll probably end up with a stop loss break even, because it's probably going to give me another candle, move stop loss to break even, and you see what it does. But this is how you can really honestly have some really big moves happening in your account, really just finding setups that make sense at major support and resistance or Fibonacci, and then using institutional candles to confirm your entry. So now another one on the upside is actually this buy on Ethereum right now. It's another example of the exact same thing. I'll clear the chart. So if I actually fib from the low to the high, what we'll see is that we came to the 61.8 again. All right, we actually kind of wicked it, pushed off, came below, but we didn't break and retest to drop, right? We just pushed back up, closed above that wick, and now we just closed higher than this 30-minute candle here. So we'll actually look at the 1 hour, also engulfed the 1 hour. But let's quickly go back to the 15-minute, all right? Because this is where the magic happens. So on the 15-minute, not only did we reject off of this 61.8, what we'll see is that we have this institutional candle here, right? And for anybody that doesn't know about institutional candles. I definitely have some education that I recommend you guys to watch. So definitely DM me and say, just say, how do I learn more about institutional trading? And I'll point you guys in the right direction to get that type of education. But essentially, this is an institutional candle. This is the last candle before they pushed up and made those, higher highs in the structure, and market has never retraced to this point, right? As long as they had engulfed it, they just took off straight into buys, straight into buys. They only corrected up to here. So what that means is that this candle, right, is going to be a potential area that the market is looking to come back to before continuing with the trend. Or sometimes they'll just hit it, bounce, and then break later on. But this candle could easily be, a entry for a pending order. Because if I look to the left, there aren't any lower institutional candles that need to be filled. So easily, I would say I would do a pending order on typically the lowest one. And honestly, the stop loss would just be below the wick, and target, could easily be above the highs that they just came from. Or in this situation, we could be looking for above, the high of the structure, because overall they're making, right? We got higher highs, higher lows, higher highs, higher lows, higher high that breaks this structure over here or matches that structure, pulls back. At the end of the day, we're still making another higher low, which could lead to, higher highs. So, these are the type of, methods that I look for: a combination of, fib levels, identifying and looking at the support and resistance. So let's say, for example, here, this level, right? For me, this wick, I would play it as support. Sometimes I'll use the actual bodies, like the actual closing price. But in this situation, I kind of know what's going on here. So when, let's say, we got this candle here, this last 15-minute candle that hit the institutional level. Let's say I didn't have the pending, I definitely would have entered once they engulfed this candle. And when they retest not only this institutional candle, but they also are retesting that same level of support over to the left. And when they retest that same level, this just becomes a very high probability entry to take, because not only do we have the 61.8, we have the 15-minute institutional candle, we have the price action of them moving away from this area, engulfing, and then pulling back and retesting this institutional candle as well as that support. That's what we call, confluence, right? That's multiple, indicators and multiple reasons, multiple things in your strategy happening at the same time in this, in the same place, in the same area. When you see that, it's a high probability that you're going to get a good entry. And the way I trade is that typically I'm looking to find entries that would allow me to move swiftly into profit, and then also allow me to move my stop loss to break even to eliminate risk. I find that the best trades, the better trades, don't require a lot, right? If you can get in it and it moves, if it comes back, typically I would say that you're probably in the wrong entry, right? You probably don't have the best entry that you could get, right? So as of right now, this trade is still setting up. I'm actually currently in this buy on Ethereum, entered, right? Exactly where I told you guys that I entered. I'm entered in here inside of this candle, and just waiting for this to play out. I actually want this to come back one more time, but it may or may not, right? It's actually moving pretty well to not even have to do that. But if it did, it wouldn't hurt to take a couple more entries inside of this structure. But this is really it for today, family. Starting phase 2, I'll have 2 videos up this week, starting phase 2 of the, the examination with my Forex funds. Just only have to achieve 5% this week. So Looking to get that done within probably 1 or 2 trades. Just going to be patient. I like what's happening with crypto, so it may be from crypto. But it's going to be a good week, and I'm going to show you guys everything that happens. Win or loss, I want to make sure that it's fully transparent, and that everybody is able to ask questions. Like I said, leave comments of information that you want explained, so I can write it and list it out, and I actually go over it in my videos. The only requirement is to comment on YouTube what it is that you actually want to see from me, and different things that you want me to actually elaborate on, because it is YouTube and it doesn't treat kindly to very long videos. Definitely want good watch time, so I want to keep these things short. But if you happen to see this early enough, we're definitely looking long on Ethereum, and I would say if they break above this counter trend line, I would love to see this begin to take off. And then let's say they come back above this level here, above these highs. I think it could be gone. I think it could definitely be bye-bye for Ethereum, where all my trading styles is always if then, right? If this happens, then this will happen. So if this market works its way up and breaks this structure, right, we may get a retest, may not, but hopefully we get a retest. I would expect for this to continue to go higher and higher and higher, and probably not come back, right? Probably not come back. We see Ethereum hitting like 19,000, 20,000 on this next bull run. And it shouldn't take very long to do it either. So we'll see it do more than it's ever done for all the years that it's been in existence, in literally just a matter of months, which is the reason why, we trade crypto. It's the reason why, we invest in crypto, is because we understand that, these markets have huge potential, that it will hurt you more to just not participate than to, it will hurt you more to not participate than to just even try to participate a little bit. You're better off investing what you can, or trading very small, lots and percentages on buy side for crypto, than just not participating at all, because the potential is crazy. But with that being said, family, appreciate you guys. Make sure you subscribe. Make sure you share this video out with other people. And don't forget to trade smart, family. Peace.